Artificial intelligence just changed real estate investing forever, and most investors have no idea what's possible. This morning, a broker sent me a $52 million apartment deal. I uploaded the offering memorandum to Claude. A few minutes later, it found $672,613 a year of income that doesn't actually exist. That one mistake alone could cause someone to overpay by more than $13 million on this deal. I've been buying apartment buildings for more than 7 years, and our portfolio is approaching $500 million. Finding something like this used to take me at least a day, if not more. And that wasn't even the biggest thing AI found. In this video, I'll show you exactly the complete beginner's guide to using AI for commercial real estate investing, step by step. One quick thing before we dive in, if this video gets you excited about what's possible with AI, we're hosting a free AI for commercial real estate investing masterclass where we'll go even deeper. I'll share you more details at the end of the video. Meet the Meridian, 197 units apartment, built in 2018, so it's newer. No leaking roof, no ancient plumbing. They want $52 million for it. One term you'll hear me use, cap rate. All it means is how much income you get for what you pay. Higher cap rate, better deal for the buyer. Lower cap rate, you're paying more for the same income. That's it. That's the whole concept. Now, when a building's for sale, the broker sends you this. This is called an OM, 90 plus pages, photos, marketing research, and financials. And here's what nobody tells you when you're starting out. This is a sales brochure. Everything in it is true, and everything in it is arranged to make you want this building. Those two things aren't in conflict. That's just what the document is for. So the job isn't catching anyone lying. Brokers don't lie. They'll lose their license. The job is to figure out which of the true things they told you are actually holding the price up. Before I open anything, let me give you the map, because this only makes sense if you can see where it fits. Every apartment deal anyone has ever done, yours, mine, $1 billion funds, goes through the same 5 stages. From the day it shows up in your inbox to the day you're sending your investor their tax forms. 1, finding the deal. Everything that comes across your desk. 2, figuring out what it actually is worth. 3, checking the paperwork and the property once it's under contract. 4, running the building once you own it. 5, taking care of the people who put their money in with you. That's the whole business. Everything you'll need to do fits in one of those 5 boxes, and AI helps at every single one of them, but not by making decisions, by reading everything first, so you spend your attention where it actually matters. Today, we're going deep on number 2, figuring out what a building is actually worth, because that's the one where the money is, and that's the one that takes the longest by hand. I'm using Claude. It's an AI made by a company called Anthropic. Most people know the version where you type in questions and it types back, and that version is genuinely useful. But there's a second mode, and that's the one that matters here. It's called Cowork. The difference is simple. Chat talks to you. Cowork actually opens the files and does the work. It'll read a spreadsheet, build you a new one, and remember what you told it last week. Same app, 2 gears. You're not picking a different program. You're picking how hard it's working. You'll need a paid plan for a Cowork side. That's just true. I'm not going to pretend otherwise. Now, before you open anything, make a folder on your computer. I call mine Deal Desk. Inside 4 folders, and notice these are just the stages I showed you a minute ago. Deals I'm looking at, deals I'm buying, building I own, and investors. This part matters more than it sounds. That folder is the only thing on my computer Claude can see. It works inside a sealed off space. It can't get into my desktop, my photos, my taxes, just the one folder I hand it. So now I make a project, I point it at that folder, name it Deal Desk. Anything it builds lands in there. And here's the last step, the one that actually does the work. A 1-pager. I call mine the buy box. It's just written lists of what I actually buy, where, what size, how old, what I need to make on it before I'm interested. Nothing fancy. It took me a few minutes. It lives in the project permanently. So every time I sit down, it already knows how I invest. I never explain myself twice. And I want to be blunt about this because it's where most people go wrong with AI. If you don't tell it what you want, you get generic answers because you give it a generic person. Everything you're about to watch happens because of the 1-pager. First pass, this is what I run everything that lands in my inbox before I spend real time on anything. Here's the deal package. Against my buy box, sort into pursue, pass, or park. Give me a go, no go in under 200 words and lead with the single biggest reason to walk. Park, not pass, which is a real distinction. It's saying nothing here is a deal breaker. It's a price problem. And here's what it led with. I want to understand this one because it's a trap that gets first-time buyers. You borrow most of the money to buy a building like this. So the question that decides everything is simple. Does the building earn more than the loan costs? Here, it doesn't. The loan is more expensive than the income, which means the moment you borrow money to buy this thing, you make less, not more. Borrowing is supposed to help you. That's the entire point. When it hurts you instead, that's a bad price. Then it did the thing I actually care about. In the one-page document, I wrote down the minimum I need to make in the first year. It went and got the number, compared it to the deal. The deal comes in under, and that's using the seller's own optimistic math. Now look at this part, because this is the difference between something useful and a spam filter. It tells me what does work here. Right market, right age, right size, right kind of neighborhood. Nothing wrong with the building. The building is fine. The price is wrong. And it told me roughly where the price would need to be, not 52 million, somewhere in the mid-40s. Notice what happened though. I never asked about loans. I never asked it to check my return targets. It went and got my rules and applied them because I wrote them down once. And then it offers to go work on the exact price where this deal would make sense, which yes, obviously yes. But hold on to that thought, because before I let it price this building, I want to check something about the number it's pricing off of. Every single thing you just watched is built on one number, the income that the seller says the building makes. So is that number real? 3 documents can answer that, and the useful thing to know is that 3 different people wrote them, and they don't all want the same thing. The projection is the seller's version of the future. The broker wrote it. The trailing 12 is what actually happened. Last 12 months, the building's actual accountant wrote it. The rent roll is who's living there right now and what they're actually paying. The property manager wrote it. And there's one detail about that middle document, the one that ends up deciding this whole deal. It isn't one number for the year, it's 12, one for every month. Hold on to that. Now we're switching to a more powerful model here. This is the number that decides whether I buy. The offering brochure gave me yearly totals. I got the month by month. Go through it. Is any single month making the year look better than it really is? And they say they clean up their repair costs. Tell me exactly what they took out and whether that's fair. Okay, insurance, watch this one because it's small and it's sneaky. Every month, this complex pays around $13,000 in insurance every single month, except one. 1 month, it's $4,000. That's not a good month. That's a refund. Money coming back one time, never again. Not repeatable. But it's sitting inside the yearly total, so the whole year looks cheaper to insure than this building actually is. And then the seller takes that already flattering number and shaves it down. So they're telling you this building's cost less to insure than it has ever cost to insure, based on a discount nobody has gotten yet. And you would never catch that looking at the yearly number. You can only see it month by month. That is the whole reason I care about this document. And I'll be honest with you, that's a catch I would not make at 11 at night on a third deal of the week. And I've been doing this for years. Same trick on repair costs. Now the seller says they took a one-time repair and that's completely fair. Something broke in August. It got fixed. It shouldn't count against their next year, except they took out more than the thing actually cost. They're calling it a major system replacement. On a 200-unit apartment complex, a one-time event which over the years you own this, it just isn't. Now here's the thing that changed how I saw this deal. All the expense stuff, it's a small half. Most of the gap isn't the expense at all, it's rent. Which means this whole projection isn't really about running the building better. It's a bet that every tenant in this building starts paying more than anyone in that neighborhood pays right now, within a year. And it checked that against the neighborhood. The bigger apartments hold up fine. The 1-bedroom don't. They're above what comparable 1-bedroom nearby actually costs. That's about 40% of the building, sitting on an assumption the neighborhood doesn't support. And then it does something I really want you to notice. It stops and it tells me it can't go any further because I never gave it the list of who's actually living there and what they're actually paying. And it really tells me exactly which document it needs. It didn't guess. It didn't invent apartment numbers to look through. It got to the edge of what it knew and said so. If you take one thing away from this video, take that. An analyst who makes things up is worse than no analyst at all. The reason I let this near my deal is that it does this instead of filling the blank and hoping I don't check. So let's give it what it's asked for. Here's the rent roll. Now go through it and flag every apartment that can't realistically get to the rent the seller is promising. First thing it does is check its own work. Make sure the 2 documents agree with each other before it trusts either. They do. Good. Then this, of every occupied apartment in this building, exactly one is paying what the seller says the market pays. Big red flag there. And here's the part that matters. The seller isn't just asking you to raise everyone up to a normal market rent. Go look at what they actually did. They took market rent and then they added more on top of it. So the ask isn't get these apartments up to market. It's get them above market. So it went unit by unit, apartment by apartment, all of them. What this person's paying, what could you realistically get them to? Can they actually reach what the seller is promising? This is something that would take a long time if you have to parse through the rent roll manually. And the result, 134 of them can't out of 183. And it was being generous. Assume you push rents harder than most people ever get away with. They still don't make it. Then it ran it again, gentler and harsher, just to see. Push softer and nobody makes it. Push harder than anyone actually pushes and it's still over 100 apartments short. But here's the part that actually decided this for me. Some of that rent increase isn't just hard to get. It's impossible to get because the seller isn't only asking you to charge market rent. They're asking you to charge more than the market rent, and you can't. Not that nobody can, but you don't want to be the trailblazer in this scenario. That money doesn't show up because you manage the building better. It only shows up if the entire neighborhood gets more expensive, which might happen, but that's not a plan. That's a hope, and they want you to pay for it today. The AI put it better than I would. It's a bet a market is wearing a mark-to-market costume. That's the deal. The story about capturing below market rent, some of it is real. Most of it is guess about the future. Dress up as something you control. And then it built me the file. Every apartment in the building, one row, what they pay, what they could pay, whether they get the seller's number, and if not, how far short. 134 rows that said no. Second tab, the summary. Third tab, the whole thing laid out line by line with a note on every assumption. And I want to be specific of what that is because AI made a spreadsheet really undersells it. That's the file I walk into negotiation holding. It answers the only question the broker is going to ask me, which apartments specifically. Building by hand is a full day, 2 if you're careful. And you have to be careful because if one rule is wrong, the broker finds it and you lose the argument. And then it offers to work out this price where this deal would actually make sense. So it lands this $672,000 a year of income that isn't there, which on a building this size is about $13 million of price. The seller's numbers support $52 million. What this building actually earns supports $39 million. And remember earlier when I said the deal works in the mid-40s? That was using the seller's number. On the real side, it's 39. Here's the cleanest way I can say what just happened. They're advertising a 5.1 cap rate. On the actual numbers, at their asking price, you'd be buying at a 3.8. That's a whole deal in one sentence. It took about an hour most, which was me reading. I opened up a sales brochure, the OM, and it came out with an apartment by apartment breakdown, a set of what ifs, and a file I can take into a negotiation. I didn't build any of it. I told it what I care about once on a one-pager. I'd be doing you a disservice if I stopped there. It can be confidently wrong. Every number I showed you, I checked against the original document. You watch it refuse to guess earlier. That's the behavior you want, and it's not a guarantee. Checking anything that matters every time. It doesn't know your market like your broker does. The reason a building has been sitting for 8 months isn't written down anywhere. It can't give you legal or tax advice. And if you're raising money from other people, that's regulated. There's no shortcut through it. And if you fed it bad information, you get a beautiful, confident, completely wrong answer. And the risk nobody talks about, speed makes you sloppy. When this takes an hour instead of a day, the temptation is to look at 5 times as many deals with a fifth of your attention. Use the time to think harder, not move faster. All right, before you click off, take stock of what you just picked up. You know how the seller's projections gets inflated. You know to look at the monthly numbers instead of the yearly one. You know that borrowing can work against you if the price is wrong. And you know that we've cleaned up the numbers. Is a sentence that deserves a follow-up question. Plenty of people 3 years into this business still don't have that. Take that as a win. And now the honest part, everything you just watch is the machine. None of it is the operator. Here's what happened the first time you try to run a deal. It hands you clean, confident, beautifully formatted answer. 12 pages, every number is in the right place. And you have absolutely no idea whether it's right. You'll know what a cap rate is. You won't know whether this one in this neighborhood on this building is a bargain or a warning. You'll know to check the monthly numbers. You won't know which month is the one that kills the deal. I knew to be suspicious of the insurance line because I've been burned by an insurance line. That's not knowledge, that's scar tissue. Knowing the words isn't the same as knowing what to do with them. It's the floor, not the ceiling. And the gap between running the analysis and knowing whether to believe it is a whole distance between where you are right now and looking at a real deal and knowing, not hoping whether it's worth your money. So we built a free masterclass to close it. The framework we use on our own deal, the full set of prompts, and the part that actually matters. How to read what it hands you, where it goes wrong, how good looks like so you can spot the bad. The judgment taught free. Link is in the description. You've got the machine, go learn to operate it.